Tesla Inc., ticker symbol TSLA, has had a crazy past couple of days and even more a past crazy couple of months. The stock is currently trading at $455, recently had a 10% sell-off from its all-time highs, but is slowly rebounding. If we go over the stock, year to date, it is up 77%, even had lows at $144 and is up 230% since that time. What we're going to be doing today is looking at the stock and then giving a fair valuation based on discounted free cash flow model, comparable company model, and the Ben Graham formula for intrinsic value. So just quickly talking about the stock, it did have a very strong rally, about 100% after the election results. If we go over the last 5 years, people were saying the stock was dead. It had its prior highs at $407 a share, sold off about 50%, had a little rebound, sold off 30% again, but now on this 150% rally, it is at all-time highs once again. If we go year to date, it's not beating the likes of Nvidia, but Amazon and Apple, it has left them in the dust a little bit. So let's have a look at my automated stock valuation spreadsheet. If you're interested, check out my Patreon, but we'll talk more about that later. Put in the ticker Tesla, TSLA. What this will do is it will load all the latest company financial information, and then we can see if it is a buy or a sell at these current prices. $440 a share, $1.4 billion in market cap. I just showed that sheet here. This is actually the top S&P 500 constituents. Tesla sitting at about 6, with only Meta, Amazon, Nvidia, Microsoft, and Apple ahead of it. Pardon me. PE 120, market average is around about 30, so a lot higher than the market average currently. Earnings per share $3.65 and a beta of 2.36, one of the more volatile stocks you'll see on the channel. Shares 3.2 billion and target price of $277 a share. So the reason why this is probably so low is these analyst target prices don't come out all the time, and analysts were probably valuing it when it was around about here, so saying it could. Obviously it's had a massive run up since then, and they were right, but then they do just wildly speculate. I think a lot of analyst target prices are a lot of noise. Anyway, revenue all-time highs, 97.15 billion. This is the trailing 12 months, 2023. So they still have had massive growth, but it has slowed from the last year, which is a bit of a negative. Net income, are they be able to generate more profit with that revenue? They haven't. Profit is down slightly, 12.7 billion compared to the prior high, all-time high of 15 billion at the end of 23. Free cash flow, similar story once again, 22, 23 were the highest, 1.55 billion in free cash flow, basically numbers that we haven't seen since 2019. And if we look at the stock price back in 2019, we can't even go, we can go max. We'll just do 5 years, it's 2020. The stock is up 1,500% since that time. Now, we also like to look at the operating cash flow versus the capex, and yes, this is what we like to see. Operating cash flow, not all-time highs, but increasing around about just shy of 15 billion, but capex is still massive, very high. Shares outstanding, what are they doing? Well, there are a few splits in here, but overall they are issuing more shares of Tesla, using this to reinvest in the company. So let's have a look at the discounted free cash flow model. This is the way of valuing stocks, looking at their future free cash flows and discounting them to today's value. I don't think it will like Tesla's current price, and currently gives us about $10 a share. So that is a very low, but let's have a look at the numbers. So in terms of revenue estimates, we're expecting 140 and 135 billion. Based on the averages of the last few years. Current year, 116 billion for 25, 145 is the bull case. So we'll bring this up just a smidge. We'll say 20%. Probably still puts it $10 a share, very low. Also, weighted average cost of capital is very high, 15%. What we'll do is we'll bring that down to sort of the average, which is usually 8.5, 20% here. Net income margins, I think these are going to be increasing over time, so we'll just take an average of these last 4 years, because this was 2%, and we'll bring this to about 13.5%. That puts us at $23 a share, we are getting closer. And net income to free cash flow, we'll take an average of these last 5 years, but obviously free cash flow rate is decreased, 20%. I mean, yeah, $30, yeah, I don't think it's hitting that anytime soon. For them to be fairly valued in terms of, well, just seeing here, free cash flow ratio 800, 700, very high. For them to be sort of fairly valued in terms of a discount free cash flow model, even if they had, increasing free cash flow like this, $300 a share, and that would be very, very, very big. You can see here the cash flow would be up to 37, 45, and 54 billion, which is a long away from where it is currently. We won't look at the dividend discount model. Tesla don't pay a dividend yet. Ben Graham formula for intrinsic value. This is created by the godfather of value investing himself, Ben Graham. Looks at earnings per share, P of a non-growth company, and AAA corporate bond yields. What are analysts saying for Tesla's growth rate? They are saying in the next year, 31%. So not a buy, unfortunately, $123 a share. For them to be valued based on this, even if they had, 150% growth a year, that's quite a lot. So not a buy according to this. But finally, my favorite model, the comparable company model. This is a way of valuing companies looking at other businesses of similar size in the same industry. We're going to do a few sets here. I will actually be comparing against some of the bigger constituents, the S&P. I think that's quite fair. But we'll do a few off the bat and see what we can get. Now, Rivian, Lucid, and GM. I don't think we're going to have all the information on these because of the fact that two of them are smaller companies. Yeah, see, they don't have a PE, they don't have a forward PE. Not good. But we can do GM, sort of a car company. We'll also do, we did Ford, I mean, it's not a like for like, and Toyota, which is ticker, I don't remember, ticker. Toyota is on the New York Stock Exchange. TM, I feel like I could have got that. Toyota Motors. Toyota here is also in yen, so ignore the very high valuations here for enterprise value and that. In fact, I'll just quickly calculate these manually. Yen in dollars. I say manual using Google. Okay, so that's 300 billion in revenue. So Tesla is the largest. Revenue second, lowest actually. Ford and GM very similar. Toyota about 300 billion. Tesla only 90. I say only. Revenue growth rate, Tesla is still the highest, 35%. That's massive growth. Toyota pretty good for a company the size of them with 300 billion in revenue. EBITDA second lowest. Net income, Tesla is surprisingly the second most profitable, which is good. That's about 30 billion in profit for Toyota. Margins, higher margins than all of them actually, in terms of car companies, 13.7%, 0.07. So we've got price to sales, price to book, PEG. Tesla is the highest in all of these metrics. So EV to revenue, EV to EBITDA, P, and forward P, Tesla is the highest on all of these, puts it $135 a share if we were going to compare against car companies directly. So that's why I also wanted to, if we're going to compare to sort of their competitors in this space, we'll do the top three first. We'll do Apple, Microsoft, Nvidia, AAPL, MSFT, NVDA. If you're interested in the sheet, check my Patreon. $4 for this sheet. You can get $7 for a higher tier. It includes reviews. But if you just want to help me out, $1.50 a month would be very appreciated. So here we go. This is comparing against Apple, Microsoft, Nvidia. We'll just quickly run through some things here. I'll just look at the margins. Margins a lot lower than all of these companies. PE a lot higher, 200 and 245 in terms of PE and EV to revenue. EV to EBITDA. EV to revenue, pretty good, but it still brings the price to $300 a share if we were to compare against these. Now, if I was going to compare against Amazon, Meta, and Google, we'll do them. We won't do... Yeah, I think that's fair. Amazon, Meta, and Google as well. AMZN, Goog, and Meta. Let's see what it gives us in terms of valuation here. $213 a share. So compared to the other constituents of a similar size, obviously different industries, Tesla does look overvalued at the minute. So yeah, give a comment on your thoughts down below. If you're a holder of Tesla or if you think it is a buy at its current price. Yeah, subscribe if you haven't already. Check out my Patreon, and we'll catch you guys next time.